Oh my gosh, IIREC 2020 was absolutely awesome. Thank you guys so much that came out and supported. It was really great to meet all you there. It was such an awesome year. When we did it last year, which was technically 2018 because we did it in the fall as opposed to the winter, it was an excellent event. It was an excellent first-time event especially, but there's always things we can do better. And in part due to the fact that we had a lot of momentum from 2018, we felt much more comfortable kind of expanding the budget, and those little tweaks made a big difference. So Chrissy, who is my wife and also the event producer, I can't thank you enough. That was awesome for everyone that attended. That was absolutely awesome. It literally gave me chills so many times. There were so many moments that I just looked around. I was like, I can't believe we all are making this right now. I can't believe that this community is so cool. I can't believe that people came in from more than 20 states. People came in from multiple countries to come to this real estate conference. And the part that I was so excited about was that there's really nothing like it. It's a really, really good combination of very dense, very detailed, very high-level real estate investment advice and perspectives from some industry leaders. But also, it's fun. It's not stuffy. It's not just only CPAs and attorneys, though ours were there. There's cool people from, and not that CPAs and attorneys can't be cool, both of mine are, but there's people of different walks of life, people that focus on not how much money they have in the bank, but how much impact they have in the world, how many children they have, how many experiences they have with their family, how many accomplishments they have athletically. And it's just a really cool group. The location also was very cool, downtown Los Angeles. Hope to be back to that venue. I hope they'll have us back because we felt like we got a great deal. And man, I just really hope that you guys can make it next time because if you didn't, it's really something special to get all those people together in the room. And yes, the educational content is amazing, but the networking component is so cool. And I could just look around and see so many smiling faces, people that I really, really care about and I'm so excited for. And man, there's one thing that I wanted to mention. It is shocking the people that were there the prior year and seeing where they were in their careers now, especially the people that have gone through my mentorship program, which is available at cfcmentorshipprogram.com. They have taken off like rocket ships. They have gone from, oh, I'm interested in investing in real estate. Oh, I want to be a real estate entrepreneur to my brand is launched. Here's my business card. Here's my personalized email. Here's my email signature. Here's the asset classes that we're working on. Here's the relationships that I've already established. Here's the podcast interviews I've already done. It's insane. So look, if you are interested in supercharging that, take a look at the CFC mentorship program. Because that has been, and it's not because of the program, the people that have gone through it are amazing and use that tool as rocket fuel. It's just, I'm so proud of those guys. So I want to talk quickly about some of the key takeaways because there's many with the conference. I got to moderate 2 panels that I was just very, very excited about that I wanted to share some of the key takeaways with. The 5,000 unit panel was awesome. So that was me as a moderator, Antonio Marquez from Comunidad, who is the operating partner of our fund, which is currently available, and Gelt, Keith over at Gelt, and Jason Post from Post Investment Group. Such a cool mix of people. All of them each have at least 5,000 units. I think cumulatively they almost have about $1 billion worth of multifamily assets. Jason Post, Antonio, and Keith are all very different. And that's what's awesome. When you get people in the room that have different strengths and weaknesses, but you can start to realize that they're all super successful, which means that success is not about just having one specific personality type. It starts to open up your mind in terms of the fact that you can do this too. Now, in all fairness, one of the questions to Antonio during the panel was, what can I do to be where you are in 10 years? And basically his answer was, don't try. Because if I can convince you not to, you won't be able to make it. Because it's going to take a ton of work. It's going to take sacrifice. It's going to take, the worst of all, missing time with family to make sure deals close, leaving dinners to ensure that wire transfers got received and things like that. And I've been there, and Antonio and I have been there, and he and I have been there together. But at the end of the day, it is so rewarding to have that kind of impact on the real estate market, but also communities. That was a huge part of the panel that kept coming up, was that each of the members are really focused on building a community within their properties. It's incredibly powerful in terms of retention. It's incredibly powerful in terms of the amount of turnover, the amount of wear and tear that goes on at the property, just creating a sense of community and communicating effectively to your tenants. And all of the members of the panel have some sort of charitable cause that they focused on. Both Antonio and Keith from Gelt both have their own 501c3 focused on different things. And that's really powerful. Now, both of them claim that it positively impacts the bottom line directly. I'm not 100% on that. I don't really know. I haven't seen their books. But I know what is 100% sure is that that charitable cause motivates them to get out of the bed. It motivates them to work harder because things get tough in this industry. And when they feel like they're doing something for the greater good, it motivates you to take your career to different heights, which 100% does positively impact the bottom line. So I think that's really, really powerful and awesome. Another panel that I wanted to talk about briefly was the passive investment landscape. And we had some rock stars. We had Jeremy Roll there, Jillian from Realty Mogul, and we also had Andrew from CoStar. It was so cool to have Andrew there because this is not someone who, all of the people that speak at our events, most of them are not professional speakers. Some of them do a lot of conferences. Most of them don't because they're focused on real estate. Andrew is one of those guys that's just super data analytic. And we kind of like pulled him out of that world and got him to speak at this conference, which I was so lucky for. And he had a great time. But it was one of those things where he's just got so much data. He's got access to so much data because of what he does at CoStar that I just grilled him for like an hour. Which markets do you think are the best? Which asset classes do you think are overheated? What's really surprising, and I didn't really expect this going in, all of the panelists aren't really anticipating a massive snapback in terms of cap rates. That's pretty surprising to me. They basically believe that because of the totality of the capital markets in the world, there's such a demand for yield to the tune of trillions of dollars. So there's all these trillions of dollars going around looking for yield, and real estate, particularly United States real estate, is such a compelling way to invest that it's hard to imagine a situation in which you see a 400 basis point correction in cap rates. That would mean from going from 6% cap rates to 10% cap rates. Now, that would be a very, very significant in terms of historical standards, but even some kind of moderated version of that would be something that I would expect at least some people at the conference to kind of believe would happen. We didn't have a lot of that. Now, Jeremy is very, very conservative, as you guys may know. He's been a guest on the show many times. You can research Jeremy Roll, Cashflow Connections. You'll find his episodes. But other than maybe Jeremy, all of our panelists are constantly seeing compelling deals, investing, and it's not that everyone's sitting on the sidelines. In fact, they're very bullish on the state of real estate. Now, it may be the case that the returns that are going to be projected over the next 5 or 10 years are going to be lower than what was projected over the last 10 years. That's to be expected, and I think mathematically it's basically impossible for that to be overcome. But Jillian added a lot of color there too. She's basically saying she started right as crowdfunding was born. And so as crowdfunding became popularized, you see this kind of thing taking place in the world right now where the first deal an investor invests in crowdfunding, maybe it's 2014, they just get a return of principal today and they experienced maybe a 16% IRR, which is just incredible. I've invested in deals back then that were relatively stabilized that produced a 28% IRR net to investors. Now, as an investor, and I consider myself to be a sophisticated investor, I basically realize, okay, that was an incredible home run. But other investors that may get that 16, 17, 18% IRR in a deal that's relatively stabilized, they may think, wow, that was just my first deal. I only got a 16% return because it was my first deal. Well, watch this. This second deal is going to be way, way better in terms of the IRR. And so you find investors now kind of chasing the IRR, the marketed IRR, and not really contemplating things on a risk-adjusted basis. When I continue to have this conversation with investors, this is why our workforce housing fund is underwritten conservatively, and we believe those IRRs are achievable. I think that 13, 14, 15% IRR, that is achievable in the workforce housing space. I'm confident in that just by implementing expense reduction and slight value add strategies. But the point is, when a lot of investors see a 12, 13, 14% IRR, they basically just move on and try to find another deal that's more advantageous. And so this is something that the real estate industry is going to grapple with going forward. Now, to close this out, this short little Monday Minutes, I wanted to talk about something. So we had these super dense opportunity zone panels where we go into the details of the new regulations and the tax code, and the 5,000 unit panel, we're talking about floating rate versus fixed rate and Fannie Mae, et cetera, and which markets and the market dynamics and the specifics of population growth and the dynamics within that population growth, which piece of that population is actually, getting job growth and all this stuff. But something I really loved about IIREC was that it's intermixed with lifestyle related panels. And one of those panels was living your ideal life through real estate. On this panel, I think one of the most powerful things the whole weekend happened, which is that a good friend of mine who goes by Tuna, Eric is his actual name, but he goes by Tuna, self-made millionaire, was talking about the fact that from a pretty young age, 23, 24, et cetera, he was just so focused on how to make $1 million. And it was just an obsession of his. And he was just thinking about, gosh, one day I'm going to have that net worth, or I'm going to see that in a bank, and I'm just going to be like, wow, I've made it. And then everything's going to be downhill from there. It's going to be amazing. And he tells a story about how he got there. He had $1 million. And he saw it in the bank statement, and it was like, Actually, what he said was, I had a sip of coffee, and usually after I have coffee, I usually have to go to the bathroom. And so that's what I did to celebrate. And he kind of contemplated that. And now he said, in today's life, he realizes that number is not really that consequential once you get above a certain level, and you don't have to worry about where your housing has come from, where your food is coming from. And he says, my dad, this is Tuna speaking, my dad has really wanted some short shorts to work out in because he likes to see his own legs or whatever. But his dad's pretty short himself, in terms of his height. So it's hard to find shorts that don't go all the way past his knees because he's a short guy. And so Tuna did some research, took some time out, found some athletic shorts that are perfect for short people, and bought him these shorts that were $100, and his dad loves them. His dad absolutely loves them, wears them all the time, has to wash them over and over again because he always wants to go to the gym, and he doesn't want to go to the gym without his special shorts. And he's like, that is more fulfilling than $1 million. He's like, that memory, or when I get a text from my dad saying, thanks again for the shorts, man. He's like, that's powerful. And I just thought it was such a cool moment because it was right after these super, super dense, somewhat dry, you guys know me and I love that stuff. But even I needed a breath of fresh air, and it was just such a breath of fresh air. So Tuna, thanks for sharing that story. And if this sounds like the kind of stuff you guys are interested in, we are going to do this again and again and again because it's an awesome environment where friendships are made, relationships are made. And I'm so proud of you guys. I'm just so proud of the culture that we've created with this program. And it really manifests itself in a special way at IIREC because you look around and it's just smiling faces that have been through so much of the same stuff you guys have been through, but are also very different. So thanks so much. Hope you enjoyed it. All right, listeners, you know the routine. This show is all about learning, making wise investments, and protecting and growing your capital. So if you're interested in these topics, make sure to hit the subscribe button. Of course, if you've already enjoyed a couple of great episodes, don't be shy. Leave a review. It really helps the show's visibility. And lastly, if you're an accredited investor and you're interested in learning more about our investment opportunities, the types of deals that I personally invest in, go to asymcapital.com. That's ASYMcapital.com. Thanks a lot.